What up, everybody? It's your boy CG, back to you guys again with more crypto news. Now, before I get into the topic of today's video, if you guys could do me a favor and hit that like button, it's the easiest way for you to show your support to the channel. It takes less than a second. On top of that, it puts me on the good side of the YouTube algorithms. So, today's topic is actually something I've touched on before, but I never really went in depth in. And it's something that has been slowly but surely growing in acceptance through the cryptocurrency and blockchain space, but is still a huge and major problem today in our current financial landscape. And this problem has actually been holding back millions of Americans from actually achieving their goals of financial independence or freedom. And what I am talking about is today's accredited investor laws. And for those of you who don't know what an accredited investor is, a person is considered an accredited investor when they make over $200,000 per year, or they have at least $1 million capital to invest, or liquidity, I guess, whatever they define as $1 million capital. And these bars or these lines or stipulations that people place on allowing people to invest in startup or early projects is exactly what's holding a lot of Americans back from being able to establish themselves in a financial way. So, for instance, I'll give you guys an example. Uber. Uber, when it first came out, or I guess its early startup phases, Uber was valuated around $5 million. Today, Uber is worth around $30 to $35 billion. Could you imagine the return for an average person looking to get into Uber? Like, it doesn't take rocket science to understand how big of a difference that would have made in a lot of people's lives. And the fact that only people with a lot of money were allowed to invest in something that we citizens use every day is ridiculous, in my opinion. These accredited investor laws are extremely unfair to the average American, and I understand that not everybody is smart with their money, and there are idiots that go out here and just throw their money off of word of mouth without doing any due diligence or research. I understand that, but let's be real. It's just how things go. It's what's the word? Survival of the fittest. Like the weak get eaten. You know what I mean? That's just the world. That's how the world is. It's a dog eat dog world. So if you're not doing your research and your due diligence, you're gonna get eaten. You're gonna get destroyed. Like everything is gonna go up in flames. So the fact that we are being barred from investing in these things in the current financial climate, as opposed to us being allowed to do these things, is extremely unfair. And I believe that if people were allowed to do these things, like let's even say from Jump Street, from the beginning, I believe that there would be a lot less of an economic or financial disparity between the classes, the social hierarchies in America. So the first article I'm actually talking about today actually discuss a VC or venture capital firm known as A16Z. I've discussed A16Z before in a previous article. A16Z was looking to do a crypto raise, or a raise for a crypto fund worth around $450 million. They did a raise last year, in the beginning of last year, and I believe they raised around $300 million. They also did a second raise last year, but that was for biotech technology, or whatever, biotechnology, and they raised about $450 million. So they're a really forward-looking firm, apparently. So they're doing a second raise for crypto I've discussed before, and this raise actually closed at around $515 million, which is crazy if you think about it. And let's even break it down even further. This $515 million didn't come from the average everyday working man who wanted to make a difference in his life. This came from rich people who are already rich, who just want to be richer. So it's ridiculous when you think about it that we're not allowed to give our money to these people to invest, but these people who already have money to invest are allowed to. It's stupid. And like I said, I understand. There are stupid people out here, and there are how can I put this? People who don't quite understand financial concepts that just go by word of mouth. But like I said, it's about being select and non-select. And that's what it comes down to. You're either the select person who knows what they're doing, or the non-select person who doesn't know what they're doing, and they get eaten. So going on to the other points in this article, they actually go on to discuss how 10 to 20% of this fund, as you guys know, before I even say this, as you guys know, with the dawn of cryptocurrencies, people now have to invest in the tokens for these companies. These tokens are not necessarily considered equity because of the current legislation or financial laws. So now there's a whole new dynamic that goes into play here. And because of this dynamic of tokens not really being considered equity, this firm is only allowed to invest 10 to 20% of the raise directly into these blockchain projects. And you guys know that's not how that works in cryptocurrency. That's not at all how it works. So what they did was with A16Z is they made all of their individual people on their team into actual financial advisors. Now they're legally allowed to invest whatever amount of money they want in this raise into whatever token or blockchain project, and they're allowed to do this as well with their previous raise with, like, let's say the biotech. So they are grasping the concept of what's going on in this financial landscape that's changing with the dawn or the rise of decentralized finance. So I'm gonna have this article up for you guys to check out on the description of the video. And I have a second article that goes further into why I feel like this is changing, what's going to happen in the future, and why I believe that we are going to eventually even the playing field, and the economic or financial disparities are going to start becoming, how can I put this, closer and closer. It's not going to be such a huge gap anymore. Decentralized finance. Now, crypto is decentralized finance for those of you who don't know. Crypto and blockchain has allowed people to invest in early stage projects or companies before they blow up into the big type monsters that they may be, or the unicorns that they may be in the future. So let's give an example. Ethereum. Ethereum had a raise in 2014, as you guys see here, for around 30 cents per Ether token. People were allowed to send their Bitcoin to this ICO raise, its initial coin offering, and it was anybody who could do it. Like, can you imagine that? If this is exactly the setup that they had for everybody. Now, Ethereum at the time was being raised. The price of an Ethereum token when this ICO was going on was around 30 cents. Ethereum is now priced in at around $137. So as this article states, a $2,200 investment in Ethereum at its startup phase, before it even became what it is today, would be worth $1 million today. And remember, they're saying Ethereum at $137 freaking dollars, and we all freaking know that Ethereum just a year or two ago was actually like $1,000, $800, $900, $1,500. So did Ethereum touch 1,500? I think it did touch like 1,200 to 1,300 to 1,500. I think it was in that range, yeah, if I remember correctly. So can you imagine how many people benefited? Like, just average everyday working Joes who, were kind of cyberpunks or whatever, a little bit more technology oriented, were able to change their lives with this inception of a non-accredited investor raise. This just goes to show you what can happen when you allow regular people to invest. Like, this is proof right here. And it's gonna do nothing but keep expanding and expanding and expanding as we see the rise of cryptocurrency and blockchain technology influencing the rest of the financial world. So they made a lot of good points here, promoting the startup of capital formation. I just talked about the ICO, the opening of a secondary market where people were allowed to sell and buy their cryptos or their tokens, whatever, the coins, whatever. Loosening up returns in the private market. I just discussed that. Like, a $137 Ethereum price point is a 45,670% return on investment. And like I said, imagine when Ethereum was like 1,000. So what would that be, like $100,000, 100,000% return, 200,000% return? That's ridiculous. So essentially, we are seeing the dawn of something new, the circumventing of regulation, as this topic title goes on to say. We are seeing people being allowed to bypass these unfair laws and be able to raise capital and put it into things that they believe in. And another big thing about this decentralized finance, like as this article actually goes on to state, that I believe that I've already known this, but they stated it in the article as well. So it's funny that we all see it the same way. They are essentially bootstrapping their investors to use their product, because these regular everyday Joe Schmoes are regular everyday people. So when they're investing their money, they're far more invested in the money that they're investing than somebody who says, say, $100 million. They're not gonna really pay attention to $1,000 invested. But a regular everyday person who sees $1,000 as a lot of money is gonna be extremely invested in seeing the return on that $1,000. So they're gonna want to be able to take part in the project. They're gonna want to show it off to their friends and family that, hey, this is XYZ. I've been using it. I invested in it. I'm part owner. I have some ownership in it. I have some stake in it. You guys should check it out. And that, let's even say 300, 500 users that invest into the project now are inviting thousands and thousands of people into the project to use the app. So it's just, it's really amazing that they haven't figured this out before, that this is a great way to actually secure users to make sure your platform thrives or succeeds. And cryptocurrency and the blockchain technology are changing all of that. So it's amazing to see. It's really cool. We probably are going to start seeing VCs be formed that are located in more, how can I put this, crypto friendly jurisdictions where they're allowed to do things like this. They can have raises on blockchain technology and allow non-accredited people to actually throw their money in. Like, let's even say you wanted to do a $5 million raise and you had 5,000 people send in $1,000. You know what I mean? And that $1,000, who knows what they do, what the people who are managers of that fund do with it to make that return. But that return could be exponential depending on what they invest in. So just the fact that people are being given these opportunities, and these opportunities are in a way presenting themselves or on the horizon, it's not just something that is a thought that's going to get stamped out as soon as it gets out in there, is just an amazing environment to be in right now. I'm really looking forward to the future of cryptocurrencies and blockchain. But this has been your boy CG, everybody. Have a great day. Keep your mind open. Think about these things. Read a little bit more and stay safe. Peace.